Modi ji 1.0, Modi ji 2.0 are very good. And we're ready for Modi ji 3.0. What could be on your wish list?
Oops. That he comes back with 400.
Yeah, but in terms of...
No, see, there are few things which has been held back. For example, the farm laws, the labor reforms, the administrative reforms, judicial reforms, and the acceleration of this cycle, I think has been held back for various political reasons. If he gets enough leg room to push those through faster and accelerate us, like he said, to go to that 8-10% growth, it cannot happen in the absence of labor laws, getting people out of agriculture, getting urbanization, skilling them. So all that is something which small things add up, and that gives you the takeoff to the 10% growth number.
It's like
so I'm quite hopeful that this government comes and does that, and they leave our capital gains the way it is and not increase that.
Yeah, so it's like the batsman in good form, a couple of good innings, and now all set to knock it out. Raamdeo ji, you?
Yeah, I think one of the things which most of the government miss out is the power of wealth creation by the stock market. The capital market, I think last year, has created upwards about 120, 130 lakh crores on a GDP of about, say, 300 lakh crores. So we are talking about upwards of 35% of GDP. When the GDP goes from 7.5 to 8, there is a headline. You imagine 35% of GDP you have stuffed in the pockets of all the guys. I mean, mostly in Mumbai, but...
no, UP are the biggest.
Yeah, so what I'm saying is next year, this year, another 20-25%. I think you got to ask the economists. And they are, my sense is, one of the things they are missing out, apart from this GVA calculation he gave me, I think, is the wealth effect. See, the direct and indirect tax collection is way beyond their revised estimates. And that is coming from all the speculation which is happening in the market. People are paying, they are gaining in the market, and they are paying the taxes. And those taxes are the ones which are, I think, somewhere after 2-3 years, people will figure out that there were 3 or 4 lakh crores more than what government had budgeted. So I think the power of stock market, and I think that's a differentiator between India and China. And that's the difference between the US and rest of the world. And that power should be harnessed very well. If you harness it well, we can be $10 trillion market economy in next 4 years or 5 years. And that power should be harnessed. If you don't harness it, it can destroy also.
Okay, all right. I'm sure our audience as well are reaching to ask some questions. So anyone, yeah.
Well, Nigel, in fact, I have a guest with me who wants to ask a question. Go ahead. If you can introduce that.
Yes. Hi, my name is Dhananjay Bagrodia. I worked for Manish Bhai at Renam, now with ASK. Manish Bhai and Raamdeo sir, just a couple of questions. So now we've seen like electrification from 50% of the households to 90%. We've seen Jal Se Nal from 50% below to 90%. So we've done the low-hanging fruits. It's a two-part question. Any other segments where you all will see now in 3.0, where you'll see big sectors? And Raamdeo sir, since you've been always talking about value migration, any segments where you are seeing something similar happen? I'm not talking about stock specific.
Yeah, so my sense is that the sector of the decade will be capital markets. And this will be benefiting not only from the savings reallocation, but also shift from bank deposits in terms of share, bank deposits to financial markets. So we are going to have it's not a journey of 1 or 2 years, 3 years, but all the capital market companies, and they are very asset-light. The beauty is asset-light. Banking is extremely asset-heavy. So the kind of economic profit you are going to get, the excess return you are going to get beyond the cost of capital is going to be stupendous, and they're monopolistic in character. If you look at these businesses, they're not 30-40 depositories or 30-40 exchanges, 30-40 asset management companies. They're very, very asset management. Top 5 or 6 are 75% of all the assets. So, and you don't need anything. You don't have even a capital adequacy. So I think these are the companies which I think, if you look at 5 years, they look a little expensive, a little pricey, but that's the sector to watch.
Yeah, I don't disagree. I think financials overall is a big theme. Within that, we can keep moving from one horse to the other horse over the course of the next 10 years based on valuations. So I'd agree with that.
Thank you, both of guests.
Okay, we have another